on 4, the pros and cons of a reverse mortgage. Lots of folks are considering one of these so that they can stay home as long as possible instead of having to go to a nursing home. Our legal contributor Craig Wisnam is here to tell you what you need to know. And first of all, explain to us how a reverse mortgage works.
Well, it's basically a way for a person who's at least age 62, you can't do it if you're younger than that, to get some of the equity out of their home and use it while they're alive rather than forcing them to sell their home.
Okay. Now, does that mean that you no longer own the home? If you do a reverse mortgage, have you mortgaged it to somebody else and you're getting the payments and you no longer own it?
You own it, but you own it just like a regular mortgage, subject to the lien the lender or the bank has on it. So of course you could always turn around and sell the property, but you'd have to pay back whatever you own on the loan out of that time. Okay,
and can you only use the money for health care?
No, you can essentially use it for whatever you want. You know, if you take this loan out, it's your money. It can be used to improve the home, to make it more livable. It can be used for other purposes like caregiving and at-home care expenses.
Okay, so it sounds like a pretty good deal, but there's got to be a downside.
Well, there is. It's an economic situation where when you either sell the home or die, which are the ones that most people think of, but also when you have to move out of the home, at that time the mortgage has to be repaid. So for instance, even though for benefits purposes your kids might be able to hold on to the home while you need nursing care, that doesn't work as far as the reverse mortgage because the lender gets their money at that time. Under the federally insured mortgages, you're allowed to be out of the home for up to a year before that happens, but eventually you can't keep the home and have to live into the assisted nursing facility.
And I understand that it may compromise your ability to be eligible for public assisted housing?
Well, it makes it more difficult. One of the things, to get something like Altex in Arizona where you need nursing home care and you can't afford it, you generally have to spend all your money, but you're allowed to keep your home. Well, this of course complicates that because the mortgage company is going to force you to sell it. So it might not disqualify you for those purposes, but it won't let you keep what you might have been able to keep before.
So who determines the value of the home? Do you have an appraisal? Do you go through the whole process that you go through when you're getting a mortgage?
Yes, in fact sometimes it's even more complicated. Now some of the credit issues and things don't apply because of the way this transaction's structured, because they know it's the opposite. They're not worried about you making a payment every month. They're just worried about the equity in the home being there. So what they're really concerned about is the value in the home rather than the borrower's financial situation.
And can you take a lump sum on the mortgage, or do you have to have like monthly payments?
You can structure it either way. A lot of times it's a lump sum, or it can be a stream of payments. If you're using it for something like ongoing caregiving, you might want it to be that regular stream of payments.
So why wouldn't I want to get a reverse mortgage? Let's say I'm an older person and I didn't really plan for retirement. My home is my retirement, so to speak. Why wouldn't I want to use the reverse mortgage?
Well, you're going to have to consider whether you really think you're going to be able to stay in the home until you die. You realize that if the time comes and you've borrowed enough money, you may not get anything back when you sell the home. You also might look at your other economic options and figure out, is there a different way for me to pay for things that won't incur this interest that I'll be building up on the loan that I'm taking out against my house.
But on the other hand, for a lot of people whose home is their primary retirement tool, it can work.
Exactly. It's a way to say, I can get some money out of here. I'm not going to have to pay it back every month like I would in a conventional mortgage. It works very well for a lot of people. You just have to understand when you're going to have to pay it back and what the results are going to be.
Okay. Craig, thank you very much.
Thank you, Martha.
Up next.